Hello and welcome back to Liquid Gold TV, brought to you by Braeburn Whisky. I'm Bryony, and as the season is changing, we thought it would be nice to answer some of your frequently asked questions. So, fill your glass with something special and come and join me for a dram. At Braeburn, obviously, it's about whisky cask investment, and we have a number of questions asked at Braeburn, and so we thought it would be nice to go through some of the most frequently asked ones. And we have with us today two representatives from Braeburn. We have Sam, who you might be familiar with. Hi, Sam.
Hello.
And we have Kieran.
Hello, nice to meet you guys.
Hi. And we're going to go through, as I say, some of the most frequently asked questions, starting with one of the arguably the most relevant questions to a potential prospective investor. How does a savvy investor make money through the purchase and sale of whisky casks? And I'll direct that one at Sam.
Very important question, Bryony, if not the most important. Time and maturation. Time or patience does reward the investor when it comes to whisky. A lot of our investors are buying whisky casks perhaps within their first 10 years, perhaps, even 12, 15, 18. They're buying their whisky, at one of those ages, and over time, the whisky will continue to age. So every year on a certain day, typically the date where it was actually put into the whisky cask, that whisky's age will rise by 1 year. Now, certainly in today's market, Bryony, the older the whisky, and certainly from the brands that we work with, your Kalilas, your Highland Parks, your Dalmores, your Macallans, the older the spirit, the more valuable the spirit becomes. So to summarise, it is time and of course maturation.
I had never thought that whisky casks have birthdays.
Whisky cask do has birthdays, and we actually send all of our clients, when their whisky cask goes up in age, they will also get a birthday card for their cask each year.
That's fantastic. What a lovely touch.
There you go.
Now, when we're talking about time and maturation and that process, obviously it's very important to know what the returns over that time are going to be. So, Kieran, what is the average annual appreciation of a whisky cask?
So the average investor is projected to achieve an annual growth of 13.09% for their cask portfolio. Now, this figure comes from the last 5 years of cask sales and gives us, as whisky experts, a view of the cask landscape in numbers. Now, we like to point out, and it's a very important point, that certain distilleries in Scotland will perform better than others. And in some case studies, our clients have achieved a higher rate of return investing in more vintage casks such as Macallan, Bowmore, Lagavulin. But just as Sam said, the key catalysts here are time and patience. If you can wait that little bit longer, get to those later years in your investment, you are definitely looking at some higher rates of return.
And Kieran, is that an expected appreciation based on your initial capital investment, or is that a compound?
So that would be compounded over the number of years the client would be invested in the cask.
Fantastic. So that's a potentially very fine returns, because that obviously builds as you go through the time that you have it. Not only the cask is maturing, but also your investment.
Of course. Yeah.
So Sam, can you please talk us through the sort of nuts and bolts and the process of purchasing a whole cask of whisky?
Whisky cask investing is a 4-stage process, Bryony. The first step would be cask selection. It's a very important part of the process where your portfolio manager, who you first make contact with, would guide you through this process based off of your investment needs to select the right investment to start off your investment portfolio. Once this is complete, stage 2 would be acquisition. So this part of the process is the ownership change, transferring from our company name, Braeburn Whisky, to your name, the new owner of your whisky cask. That would then complete the acquisition stage. Stage 3 would then be storage / maturation, which we just discussed. Again, this is how you make money by investing into whisky. Whisky casks must be stored in bond in a government bonded facility in Scotland. And I, in the business, would recommend, Bryony, that investors hold it there for 5 years minimum. Some of our investors now have held whisky casks in upwards of 30 years, and they're now coming back through us, selling to bottlers, selling, of course, to other clients. So once stage 3 is complete, importantly, the last step, stage 4, would be monetization. A very important part of the process where when you, the owner of the cask, are ready to sell, we would agree a price that you're happy to sell the cask for, release the cask to the secondary market, and match you with the next buyer. And that would complete the process. So 4 steps: you're buying your cask, you're maturing it over time in bond, selling the cask on to the next buyer, and that's the 4 steps in a nutshell.
So liquidating your assets has never been so literal.
Correct.
Now, Kieran, to go back to asking you a question, what is the typical investment time horizon for a portfolio of whisky casks? So obviously that's a portfolio, not just the one. We've heard from Sam that it would be 5 years minimum recommended. But for a whole portfolio, what would you suggest?
Well, that all depends on the client's initial portfolio and the types of casks they have within that portfolio, Bryony. But as Sam has mentioned, the advice we like to give to our clients is to stay invested for a minimum of 5 years, just so they can benefit from those phenomenal returns. Of course, if you buy a younger cask, it's in the client's interest to leave that whisky maturing for a longer period of time. On the other side of things, let's say you purchase a cask that is much older in age, your investment horizon will be much shorter. And this is where tailoring the experience to our clients' needs is such an important part of our process here.
Fantastic. So tailoring is the sort of short answer to that.
Basically.
Yeah, well, it's really important because not everyone's going to have the same portfolio, are they?
Yeah, exactly.
Diversification, diversified portfolio.
So, Sam, I invest in a cask of whiskey and I decide I would like to get to stage 4 and I'd like to monetize.
Yep.
What are the exit strategies available to me and what are the associated costs? And are there any penalties if I exit the sort of strategy that we planned out early?
The lion's share of our investors, when they reach that stage 4 monetization, rather than bottling the full cask, actually having to go through the process of bottling, distributing the bottles, shipping the bottles, very simply, they will sell the cask on to the next buyer through a paper transfer. So you're transferring the ownership to the next investor or to an independent bottler. The charges at this point, there are no direct costs to the seller of the cask. As I mentioned in the last question, Bryony, in stage 4, we match them with the next buyer. We'd of course agree a price that the seller is happy to sell for, and then we would add a margin onto the resale price of that cask. So as I've said, the lion's share of investors will very simply sell the cask on to the next buyer. Could be an investor, could be a bottler, and there is no direct cost to them upon monetization.
Right. And would it with the exiting early, does that, so there's really no way that there can be sort of penalties more added on top as opposed to taken from the amount that the investor has put in?
Sure. So in terms of early penalties, no, because you're not tied into any kind of time frame. The portfolio manager that you work with for the majority of casks will recommend a minimum term of 5 years. Mm-hmm. As Kieran said, if you're going to purchase some new make, 2020, 2019, you really want to give that 10 years, 12 years until it becomes a marketable single malt. But there would be no penalties. Our recommendation in terms of our experience and how our investors make the best returns is to give it time, typically 5 years minimum.
So back to Kieran, where would a cask be stored and what is the cost of storage and insurance for that cask?
This is a very, very important point, Bryony, and for good reasons. Now, our clients' whisky casks will be stored in a government-bonded, duty-free facility across Scotland, managed by our trusted partners. Legally, this is where they have to be kept the duration of their maturation and that life cycle. In terms of the ongoing costs for storage, we charge £65 per annum for storage and insurance, and this is highly competitive in the industry. Now, this fee will cover you for both storage inside the warehouse and insurance against any loss or damage to the cask or the liquid.
Amazing. £65 sounds like, considering it's such a valuable asset, that sounds. I'm actually quite shocked by that.
Yeah, it's an amazing cost, and it covers our investors for exactly what they're investing in, the safety, the storage, the provenance, and for a little fee per year. I mean, it's if you add up your cups of coffee, then that's pretty much what it is.
Yeah. Well, actually, I probably need more coffee than that. And also, Kieran, obviously, investors are particularly excited by the fact that we've said in a few episodes that there is an option to try your cask, and also to potentially visit it. Now, how would I go about arranging a visit to my cask if I invest in Braeburn?
This is where our clients truly enjoy the process of investing in casks, and this is where the fun kicks in. So at Braeburn, we aim to facilitate opportunities to get hands-on with your cask investment. Yes, this is going to be a serious investment for you, but it's also an investment you can truly enjoy. You can request samples of your cask to enjoy at home, or arrange a visit to sample it in person. Now, there's obviously two sides of this investment. It's very, very serious. You're diversifying, you're looking for gains, you're looking to expand that portfolio of yours, but also you shouldn't take the fun out of it. And that's what we truly like to hit home with our clients.
Fantastic. That's also that's answered the question of, can I actually have whiskey sent to my own whiskey sent to my home?
Yes.
Sam.
Yeah.
Obviously, you're very passionate about whiskey and passionate about what Braeburn does, but I would be remiss in expecting you do that purely for love of it. And I would be interested to ask on behalf of our viewers, is there a handling charge or a commission put on top of the cost of a cask that benefits, obviously, Braeburn and keeps that relationship so strong?
Yeah, good question, Bryony. And I actually get asked this a lot. We, of course, do not work for free, and we have to make money as a business. The costs upon entry to investment, the cost to you as the investor, all of our charges are completely inclusive in the cost of the cask. So there are no extra fees, there are no hidden costs to you when entering the investment. As Kieran touched on, the only ongoing cost you will have with whisky cask investing would be £65 per annum per cask. That's also an income for us as a business. And as I've already mentioned, Bryony, upon monetising the cask, there is no direct cost to the investor on exit. We will match them with the buyer, agree a price that you're happy to sell the cask for, and then we will add a margin onto the resale value of the cask. So that's a full holistic view of all the costs, no hidden fees, everything is inclusive with the cost of the cask.
And actually, a lovely sort of extension of that, so no hidden costs for any investor, but an extension of that would be to ask if there is a cost should an investor do the unusual choice of exit strategy, which is to choose to bottle.
Sure.
Is there a cost implication for choosing to bottle, and is there an incentive for investors to do so?
There most certainly is cost. I'd like to handle the incentive question there first, because whiskey distilleries have distilled liquid for centuries now in some cases, and that's how they make money. They buy their liquid relatively young, they mature it over time, maturation, which we've discussed. When the whiskey has reached a certain age, whether it's 18, 21, 25, 30, even 50, they will bottle that whiskey and sell it in bottle form across the world. So yes, investors can do that, but as I've mentioned, the lion's share of our business and our investors very simply sell the cask on. If they were to do that unusual method of monetization, then yes, because the cask would then be bottled and taken out of the duty-free zone in the form of bottles, they've got to pay duty, they've got to pay VAT, they've of course paid the cost for bottling and shipping as well, to get the bottles to the destination. So The tax efficiency, of course, for investors not being subject to VAT, to duty, whilst the cask is sitting in bond, is certainly a massive benefit to all of our investors.
And I imagine that there are exceptional cases where the cost per bottle makes it very much worth that, which I imagine is the incentive for those occasional investors.
Certainly. So, if somebody buys a new make 2020 Kalila cask today, their unit cost, their per bottle cost could be £7.80 a bottle. So they're paying a very, very low cost per bottle. When you look at, for example, let's say Kalila, even 12-year-old Kalila on the market, it's about £45.45 just for the 12. Now, of course, in cask form, your unit cost could not be £45.45 per bottle, but comfortably you could sell that for £35 per bottle. So if you're taking all the bottles in that cask from £7.80 to £35 per bottle, you can see how you're making a significant return there over a 12-year period, if that makes sense.
Absolutely it does, yeah, absolutely. That really clarifies it, thank you. Kieran, when we're talking about fees and what it is that the sort of surrounding costs of investing in whisky, obviously, we need to ask about, will there be a capital gains tax to be paid on the whisky when I choose to sell?
Yes. So the best thing about whisky casks is it's extremely tax efficient. When your cask is stored in a government bonded warehouse, one of the best and one of the biggest benefits is it is not subject to tax until it is bottled, as Sam mentioned just now. From our interpretation in the UK, there is no capital gains tax to be applied on whisky casks because it's simply classed as a wasting asset here. But before, obviously, if you're looking to invest in a cask and build that portfolio up, we would recommend you speak to your tax advisor or someone who's in charge of your financials, because each investor's situation is very unique to the next. So we would always recommend you take that initial step to seek that extra advice.
It's fantastic advice, that makes perfect sense. Sam, if I choose to resell my cask and then bottle it, can I name the original distillery of its origin?
Yeah, this is a good one.
So the Bryony Purdue Macallan 18. There you go.
Why not? Again, I'll answer this in two sections. The first one is, if you just decided to sell the full cask on, well, it's exactly the same as when you bought it. So if you buy a Macallan 1988 from us, it's not going to become a Bowmore, over 5 years. It's still going to be exactly the same brand, although the age, the product will have actually completely changed over time. The branding will still be exactly the same. When it comes to the actual bottling rights, so you bottling your cask as a Macallan in this example, you couldn't brand it, you couldn't bottle it as a Macallan bottle. It has to be, instead of an original bottle, which is something a distillery bottles, it has to be an independent bottle.
I think I can ask another question which might lead on to what you're about to go into, which is an example of an independent bottler who is using the name of the origin distillery. Douglas Lane, is he a good example of someone who's doing this very thing?
Exactly. Douglas Lane, Boutique Whiskey, Signatory, Gordon and Kieran Bhalla, these are all independent bottling brands that still, even as the size of those companies, they can't just go bottle a Macallan or a Bowmore. It's got to look like an independent bottle, but still clearly on that labelling, you can state, distilled at the Macallan, distilled at Bowmore, distilled at Lefroy. It's very, very clear. In terms of value to a bottle, yes, of course, in some cases, independent bottles could be worth less. I can see an independent in the background there. I think it's a Linkwood, or is it the Kalila 9, which is the cask 88 bottling?
That's a Kalila 9.
Kalila 9. Still, in some cases, yes, independent bottles might demand less than an original bottle. But when you start to get into the premium category, like a lot of our investors, Lefroy 19s, Macallan 30s, Lagavulin 40s, typically these can actually demand much more than original bottlings because they're scarcer. You know, there's much less of them on the market. So yes, there are of course differences to a distillery bottling it, but you can still state clearly the name of that distillery where that cask is being distilled.
Fantastic. That really clears that up. That's great. Now, Kieran, I'm intrigued by this particularly because obviously I've got a couple of Douglas Lanes and this Cask 88. Obviously they've got clearly Caligula, Jura and Macduff on them, so you know that they are from their origin distilleries, but they've been rebranded because they were independent bottlers. They say fun things and details about how they might have been treated since they were taken from their origin distilleries. So can an investor transfer their whiskey to a new barrel?
This is definitely something we can facilitate. And you know what? It's something I've done personally for my clients, Bryony, which is, it's been an amazing project to, you know, kind of lead and move forward with. So the type of cask that your whiskey matures in is a considerable factor when it comes to the overall value of the whiskey inside. For example, a whiskey cask that's maturing, let's say in a ex-sherry cask, is going to appreciate more in value compared to something that's maturing in a bourbon cask. Okay, so our clients who are really looking to leverage their investment and their position in that investment, making the move to, you know, recask their whiskey will add further value to their investment, and that's something we can definitely hands-on do.
Fantastic. Well, I'm sure that for our viewers this is going to spark many more questions, and I think that it has been incredibly useful to learn all that we've learned about the various processes in investing in whiskey and a bit more detail. So thank you very, very much, Sam. Thank you very much, Kieran. And I think that we might actually be planning to have another one of these because I think this is just sort of scratching the tip of the iceberg when it comes to whiskey cask investment. So have a lovely rest of your days, guys, and thank you very much for your time.
Thanks, Brian.
Cheers, Brian.
Cheers, Kieran.
Another episode and another set of very important questions answered about what it means to invest in casks with Braeburn. We hope you've enjoyed it, and I look forward to seeing you next time for another dram.